Tesla is no longer just a car company, and that simple shift in understanding is why many long-term investors are now starting to look at Tesla as a 30-plus-year investment rather than a short-term trade. Today, we are going to break down exactly why Tesla could be one of the most important long-duration investments of our lifetime, what makes it fundamentally different from traditional automakers, and why patient investors may be rewarded over decades, not months or years. When most people hear Tesla, they still think about electric vehicles, quarterly delivery numbers, price cuts, or competition from other EV brands. But that surface-level view misses the much bigger picture. Tesla is building a vertically integrated technology ecosystem that spans energy, artificial intelligence, robotics, manufacturing, and software. Very few companies in history have attempted to operate at this scale across so many future-defining industries at once. Let's start with the obvious part: electric vehicles. Tesla didn't just make EVs popular, it redefined how cars are designed, manufactured, sold, and updated. Over-the-air software updates, direct-to-consumer sales, and continuous hardware and software improvements are now becoming industry standards because Tesla forced legacy automakers to adapt. Even if EV margins fluctuate in the short term, Tesla's long-term goal is global scale, automation, and cost leadership. The company is focused on making EVs affordable for the masses, which opens the door to tens of millions of vehicles sold annually over the coming decades. But here is where the long-term story really starts to separate itself. Tesla vehicles are not static products. They are rolling computers collecting massive amounts of real-world driving data every single day. This data feeds directly into Tesla's artificial intelligence systems, especially full self-driving. Whether FSD is fully solved this year or 10 years from now does not change the core investment thesis. The longer Tesla operates, the more data it accumulates, and data is the fuel that powers AI dominance. If Tesla succeeds in achieving widespread autonomous driving, the implications are enormous. Robotaxis, autonomous logistics, lower transportation costs, and new business models that don't even exist yet could emerge. A fully autonomous Tesla fleet would turn cars from depreciating assets into potential income-generating assets. That kind of transformation does not get priced into a stock over a single earnings report. It unfolds over decades. Now let's talk about Tesla Energy, one of the most underestimated parts of the business. As the world transitions toward renewable energy, energy storage becomes just as important as energy generation. Solar panels are useless at night without storage. Wind energy fluctuates. Tesla's Powerwall, Powerpack, and Megapack solutions are designed to stabilize energy grids at scale. Utilities, governments, and corporations need massive battery storage systems, and Tesla is already securing large contracts around the world. Energy demand is not going down over the next 30 years. It is going up, especially as EV adoption increases, AI data centers expand, and developing economies grow. Tesla is positioning itself as a key infrastructure provider for this future. Energy generation, storage, and management could eventually rival or even surpass vehicle revenue. This is a classic long-term compounding business that rewards patience. Then there is Tesla's manufacturing advantage. While many companies outsource production or rely on legacy processes, Tesla continually reinvents how things are made. Gigafactories, gigacasting, structural battery packs, and factory automation are not just cost-saving measures. They create a knowledge gap that competitors struggle to close. Manufacturing innovation compounds over time, leading to higher margins, faster scaling, and greater resilience during economic downturns. Over the next 30 years, manufacturing efficiency will matter more than brand hype. Tesla understands this better than almost any consumer-facing company. Their focus on first principles thinking allows them to rethink entire production systems from the ground up. That mindset is extremely rare and incredibly powerful over long time horizons. Another major piece of the 30-plus-year thesis is robotics. Tesla's humanoid robot project may sound futuristic or even unrealistic to some people today, just like electric cars once did. But consider the implications if Tesla succeeds. A general-purpose humanoid robot capable of performing repetitive or dangerous tasks could transform labor markets, manufacturing, healthcare, and home assistance. Even partial success in this area could create a trillion-dollar opportunity over decades. Robotics, like autonomous driving, relies heavily on AI, sensors, and real-world training data. Tesla already excels in these areas. The same neural networks that help cars understand the world can be adapted to robots navigating human environments. This kind of cross-domain synergy is exactly why Tesla is not a typical single-product company. Critics often focus on short-term risks, competition, valuation, or macroeconomic pressures. These concerns are not wrong, but they are incomplete. Every transformative company faces volatility, skepticism, and periods of underperformance. Amazon, Apple, and Microsoft all experienced massive drawdowns and years of stagnation before becoming multi-trillion-dollar giants. Long-term investing requires the ability to look beyond quarterly noise and focus on structural trends. Tesla's leadership also plays a significant role in the long-duration thesis. Love him or hate him, Elon Musk has repeatedly demonstrated an ability to push industries forward faster than expected. More importantly, he thinks in decades, not quarters. That mindset influences company culture, capital allocation, and long-term strategic decisions. While leadership risk always exists, visionary leadership can be a powerful force for long-term value creation. Another reason Tesla fits a 30-plus year investment horizon is optionality. Tesla does not need every project to succeed for the investment to work. Even if autonomous driving takes longer than expected, energy storage grows slower, or robotics remains niche for years, the core EV and energy businesses alone could still justify significant long-term growth. But if even one or two of these high-impact projects succeed, the upside potential expands dramatically. We also need to consider global trends. Governments worldwide are pushing for decarbonization, energy independence, and technological leadership. These trends align directly with Tesla's mission and product offerings. Over decades, regulatory environments may shift, but the overall direction toward cleaner energy and automation is unlikely to reverse. From a long-term investor's perspective, Tesla represents exposure to multiple exponential growth curves at once. Electric vehicles, artificial intelligence, energy storage, robotics, and advanced manufacturing are not short-term fads. They are foundational technologies that will shape the global economy for the rest of this century. That said, a 30-plus year investment mindset requires emotional discipline. Tesla stock will not move in a straight line. There will be crashes, rallies, hype cycles, and moments when the narrative turns extremely negative. Long-term investors must be willing to endure volatility and resist the urge to react to every headline. The key question is not whether Tesla will face challenges, it will. The real question is whether Tesla will still be relevant, innovative, and influential decades from now. When you look at the breadth of what Tesla is building, the answer increasingly appears to be yes. Tesla is not just selling cars, it is building platforms. Platforms that can evolve, expand, and adapt as technology advances. That adaptability is crucial for long-term survival and growth. Companies that last 30 years or more are not the ones that perfectly predict the future, but the ones that can adjust as the future unfolds. For investors who think in decades, Tesla offers something rare. A chance to participate in the transformation of multiple industries through a single company that is aggressively reinvesting in its own future. This is not a stock for traders chasing weekly gains. This is a stock for investors who believe that technology, energy, and automation will define the next half-century. In the end, viewing Tesla as a 30-plus year investment changes everything. Short-term valuation debates become less important. Temporary margin compression becomes noise. What matters is whether Tesla continues to innovate, scale, and execute on its long-term vision. If Tesla succeeds even partially in what it is attempting, it could remain one of the most influential companies in the world well into the second half of this century. That is why more investors are starting to see Tesla not as a trade, not as a hype stock, but as a long-duration investment built for the future. And that is the real takeaway. Tesla is not about what happens next quarter or next year. It is about what happens over the next 30 years and beyond.